Hello and welcome to Smaulgld's top gold and silver stories for the weekend of January 15th, 2017. Markets prepare for Trump turmoil. With the inauguration looming, Trump administration policies remain uncertain. Gold and silver prices rose during the week, even though gold ETFs inflows have dried up. This week we got a glimpse of what perhaps the next 4 years are going to be like, and they probably promise to be tumultuous. Donald Trump held his first press conference in 6 months last week, and it was a doozy. Now, I remember as a child watching my first presidential press conference, and I was kind of struck at the reporters raising their hands and yelling, "Mr. President," all at once, or "me, me, me." And I remember thinking in school they used to tell you raise your hand, but they didn't tell you to yell out. And I thought that this was kind of a chaotic situation, but I kind of got used to it. I started watching presidents from Nixon to Carter to Reagan to Bush and so on. And that's how press conferences work. The president would stand at the podium, people would raise their hand, they'd yell to get his attention, he'd point one of them out, and the person would ask their question. But last week, something happened a little differently. Donald Trump, everyone was asking for his attention, raising their hands. I guess they were yelling Mr. President-elect, not Mr. President. And he didn't call on the CNN reporter, Acosta, I believe was his name. And he wanted to ask a question because he felt that the president had mischaracterized his news organization's coverage. And Mr. Trump did not select him. And he pointed to the other reporter that he had selected. But Mr. Acosta was having none of this, and he kept saying, "Mr. President," and he kept trying to get his question in, and the president-elect kept trying to tell him, "No, I'm not going to take your question. Be quiet. Don't be rude. Your news organization is terrible." And finally, he had enough of him. He was acting like a protester, which I thought was a little too much. I understand that he was upset at the mischaracterization of his news organization, but once you're told you don't get a question, that's generally the end of it, unless you want to become a protester. Then, of course, it's your right to stand there and jump up and down and yell and scream, but that's generally not what the press corps does. In any event, the continued badgering and insistence on wanting a question led Mr. Trump to finally say, "You're fake news." Now, to which Acosta said that was inappropriate. And then he finally calmed down and the press conference carried on. But prior to that, Donald Trump had called BuzzFeed a failing pile of garbage. Now, why do I mention all this? Because this is going to set the tone of uncertainty for the next 4 years. It's not just Donald Trump's dealings with the press, but it's his entire style and the entire way that the world is reacting to him. So, for example, celebrities, they continue to try to stop Donald Trump or to console themselves. They put out another video. This one, they're singing the words I will survive," or "I shall survive," Gloria Gaynor's song, because they need to survive the Trump administration. Now, celebrities really don't have difficulty surviving, so it's kind of it kind of shows how part of the country believes that Donald Trump is going to basically end civilization, and then you've got the fervent Trump supporters on the other side that think he's going to make America great again. And that is a toxic, well, I would say it's a toxic mix, but well, it could be, but it is a mix for uncertainty and a lot of combating and uncertainty of outcome, what's going to happen. Another example is Three Doors Down. I don't know if you people who know the band, early 2000s. They had a song, Kryptonite, pretty popular band. But they are going to perform at the inauguration, and Newsweek trashed the band, saying that their fans are upset with them and basically they're has-beens and so on. Now, it's interesting when other bands take up left-wing causes, and they cancel concerts like Pearl Jam and Bruce Springsteen. They don't cover the fan disappointment. They kind of triumph how the band is taking a moral stand. So we're seeing now this kind of divergence between the the left and the right, and the outspokenness on both sides, and that is going to create, I think, a very volatile period for the markets and for gold and silver. And for gold and silver, that's generally good, because you may think this has nothing to do with gold and silver, what Donald Trump says in a press conference. Actually, it does, because supply and demand, as we've seen, have very little to do with the prices of gold and silver. Gold and silver trade on sentiment, and when traders feel uncertain, they fall to the safe haven of gold. The gold closed last week up 2.1% again after last week, right, the week before rising, and gold is just about $1,200 an ounce. Silver also closed up 2.3% to 1681. The gold silver ratio, however, still remains 71.2 to 1. Now, here are some of the uncertainties. And again, this isn't to get into politics or policy discussions. These are some of the things, and these are big, big items that are going to create uncertainty. Repealing and replacing Obamacare. That sounds simple, but it's not. And there will be a lot of uncertainty as to what's going to be the replacement, what's going to happen to people with pre-existing conditions, what's going to happen to people's current health plans, how much is it going to cost, who's going to be in favor of it, who's going to be against it. That's a big deal. Infrastructure spending. Trump is going to probably want to present a plan to build bridges, tunnels, airports, and who knows how the Republican and Democratic Congress will respond to that. Will they go for all that spending? Well, if they go for all that spending, will that create more jobs? Will that create more wage inflation, thereby creating price inflation? What's going to happen to the dollar when the United States, if the United States spends more money? Will it go back down? The dollar drops significantly, well, you might get price inflation. Building and paying for a wall along the southern border. Who's going to pay for it? How much is it going to cost? What's that impact going to be on the United States with the rest of the world, with Mexico, with NAFTA, trade agreements? Will there be a trade war with China? Will Trump try to impose tariffs? Will United States companies respond positively, negatively? Will they bring cash back into the United States? If there's a lower tax rate on it, if they do bring cash back into the United States, that might have an inflationary impact as companies then begin to put that money back to work. If you continue to have these raging press battles, they'll also create just the sense of unease and uncertainty. Donald Trump himself just going out and doing tweet storms generally riles things up, and you just never know when the next tweet is coming. And then you're going to have the people trying to undermine Donald Trump. There'll probably be Senate hearings on Russian influence and meetings with Putin and Russian prostitutes. And so there will be a significant amount of activity. There won't just be kind of this caretaker presidency where markets can look at the normal signals. They're going to get jolted from time to time, probably every couple of days, with something minor, and then every few weeks something major. And that's going to put, I think, markets kind of in a state of unease. And there's your invitation, if you appreciate the work we're doing here at Smaulgld, to donate to Smaulgld via PayPal or via Bitcoin. You can do so at the website, and you can also do so at the links below this YouTube channel. Now, gold. 43 days is a record with no inflows into GLD, which is the largest gold ETF in the world. That is the largest spell on record, and you can see, I really should make a smaller chart, but this one, it shows that's been going down, the inflows into people selling off the gold ETF, which means that the gold price has risen the last 2 weeks on the backs of futures trading, not gold ETF demand. So investors, not futures traders, but investors, the institutional investors who say we're buying gold, they're buying gold ETFs. They're not taking delivery of gold, but they are not buying gold yet. So it remains to be seen what impact it will have if the open interest on the COMEX and the futures trading continues to be long and the price of gold continues to go higher, whether there will be a reversal in the flows in the gold ETFs. You got the same circumstance in silver, still selling off, but silver is never really had the same sell-off. If you can see during these years here, 2011 on, it actually continued to rise even when the price dropped. But you see gold, when it hit its peak, it kind of sold off and it just only started to rise back up at the beginning of last year. So we'll keep an eye on the gold and silver ETFs, and we will report to you on them. Now, what happened during the week? Well, Smaulgld was busy. We did a number of podcasts, and one of them we did was what if 1% of the U.S. labor force saved in silver. We're not going to go through. This is just for Smaulgld subscribers and for those of you on YouTube who might have missed what we put out during the week. So this is here as kind of a reference point for you to go back and see what you're interested in, what you might have missed. So this one is what if 1% of the U.S. labor force saved in silver, and it talks about the impact. There would just not be enough silver, even if just American workers were to save small amounts of silver. And that's why it ties into the larger theme that the futures trading really drives the whole thing, where large amounts of gold and silver are traded by people who don't have it, and for people who don't necessarily want it. They're trading price, but they're trading connected to an actual ounce component in the contract that doesn't exist. And that enables, as we talked about, and what the real reason for the gold futures market is, that enables the price to be manipulated very easily, because absent a requirement of a one-to-one ratio between what you're buying and selling, you can buy infinite amounts. Well, not infinite amounts. There are certain restrictions, but they're not one-to-one. And you can buy and you can sell amounts far in excess of even the amounts that exist in the world over a period of time. And that's why there's a discouragement for people hoarding, so to speak, and saving in gold and silver physical. We reported on the Shanghai Gold Exchange withdrawals. They fell in 2016. Still a decent year, but the lowest since 2012. You can check out all the details on the Shanghai Gold Exchange at the blog post and at the YouTube video. Prince was in the news after his death. Apparently he left 67 gold kilo bars behind when he died. I remember I saw some of the articles. He was an unconventional investor. Well, not really. When you have tens or hundreds of millions of dollars, having $800,000 worth of gold in some safe somewhere, it's probably not that big of a deal. But they try to make it out to be, he's this quirky artist and he had gold. Shanghai Gold Exchange, they did limit the size of gold trades. Now, this does tie into the futures market. The more you can sell and the more you can buy without actually having the gold or the silver, the more volatile the market can be. So the Shanghai Gold Exchange, it's not that volatile of a market, but they're limiting the size of gold trades. U.S. Mint, they released their first day sales. If you go through this blog post, I report on the updates after the first date, and we'll always do a monthly update on the gold and silver sales each month for American Gold Eagles, American Silver Eagles, and American Gold Buffaloes. But the first day was strong for American Silver Eagles, 3.747,500. That was a good first day. They haven't reported any sales since the first day of sales. The U.S. Mint also reported 46,000 American Gold Eagle sales the first day as well. If you're interested in buying gold or silver, please consider doing so. It's not a recommendation to buy gold or silver. It's not an investment advice, but if you are going to buy gold or silver, please consider doing it through the Smaulgld website or the links below this YouTube video, because Smaulgld gets a small commission and you pay no more, no less than if you'd visited the sites directly. And it's convenient because you can compare pricing and shipping just by clicking on the links or clicking on the banners on the Smaulgld website. You can check out all the different products and you can choose, select to buy, and Smaulgld again will get a small commission. That's how I pay the bills here. So no platinum coins. They generally, I don't know if they're going to make them in 2017. I'll find out. Last year they sold them for a month or two. I think they sold 20, 30,000 of them, not too many. The gold buffalo coins had a strong first day, 20,500, and they haven't yet sold the first America the Beautiful coin yet. That one's going to be called Effigy Mounds National Monument coin. They start selling that 5 ounce coin in February. I've done a full report on the US Mint, and there's your 35% increase in first day sales in American Silver Eagles, and your 15% increase in first day sales of American Gold Eagles. You can check out those blog posts, all the charts that go with them, and also the YouTube video. And then, of course, we update on a daily basis. I also tweet out the updated US Mint numbers. I report them here on this blog post. I'm not going to go through them. You can check them out at Smaulgld at the link below that has the week in review. Economic data. Oh, Fed President Lacker, he's always been he's very outspoken, but he hasn't had a vote for 3 years. Richmond doesn't have a vote. They don't have a vote until 2018. But he's always a useful, I don't want to say idiot, but he's always useful for whenever they need somebody to come out and start pounding the table for rate hikes. They bring him out. There's no harm in him coming out and saying, raise rates, the Fed's going to raise rates, the Fed's going to raise rates. And then when they don't do it, he can always say, well, I would have voted for it, but he doesn't have a vote. He's announced he's going to retire. Okay, what else we got during the week? Some interesting silver news. New silver catalyst to fight smog in cities. You can check out that. I'm not going to cover it. You can click on the link. There's some type of process where they're going to use it in China, especially to reduce smog in cities. Also, something I've covered before. A lot of people worry that while they're encouraged by the growth in solar panels and silver's use in solar panels as giving a good industrial floor demand for silver, they worry that they've heard there's a lot of talk and a lot of technique about removing silver from solar panels and using perhaps aluminum. What's happened though since 2011, it's not so much that they're working on eliminating the silver. There are processes that do that, but they're not much more efficient than with the silver. What they've done instead is they've just reduced the amount of silver required, the silver paste required in the solar panels. And silver panels are real cheap now, so there's probably not a big push to get silver out of solar panels, but rather to reduce it. And so that should be somewhat of a growth area. I think the Silver Institute's talking about 80 to 100 million ounces of silver a year from solar panels. And the annual supply of silver is about 850, 900 million ounces when you take scrap and mining supply together. So it's significant, but it's not. It's 15% maybe of global silver demand. Had also a podcast on his gold money or something else. I won't go through that, what that is. However, one point I do want to make is in some of the comments, some people think when I say I don't think gold is money, and I'm not going to go through why right now, that somehow that's a knock on gold. One point I didn't make is that when gold was money, the price of gold was $35 for 40 years. Didn't change whatsoever. So if you complain about manipulation now, the gold price was 100%, not just manipulated, was controlled from 1934 by an act of Congress. Gold was priced at $34, and it's at $35, and it's an ounce, and it stayed at $35 an ounce until Nixon took the U.S. off the gold standard in 1971. So you talk about manipulation. The price was set at $35. That was basically what the price of gold was, and then they thought when Nixon took the country off the gold standard and destroyed the Bretton Woods Agreement that the price of gold would go down because it wouldn't be part of the financial system, which it wasn't. So the price of gold has gone up exponentially once it was demonetized because it becomes an asset. Anyway, if you want more on that, click on there. There's some interesting comments and an interesting discussion. There's a plane carrying gold crashed in Zimbabwe. Putin says Russian reserves to grow in 2018. Now, Russia, interestingly enough, not only has it grown its reserves since the sanctions in the last 18 months, but has done in part by adding to its gold reserves. Now, China is kind of the reverse. It's slowed its gold purchases. They might even have sold some gold. When I say China, I mean the People's Bank of China. They might even have sold some of their gold in December, and they're selling reserves. And Russia is solidifying its reserve position, whereas China is defending the yuan, its currency, and selling its reserves. There's more U.S. Mint updates. Some Fed chatter. This is also going to be an interesting, although the Fed might be less important than Trump this year in terms of creating uncertainty. They're going to be yakking about rate hikes, and they're now talking about not just raising rates, but how quickly they're going to raise rates. But we heard this 2 years ago that it was the pace of rate hikes. Um, they're worried about the stronger dollar, which means that would make them less likely to raise interest rates. Fed Evans said fiscal stimulus could lift U.S. GDP growth, which would probably make it less likely for them to want to. Um, well, they might want to raise rates if they see the economy getting stronger. But if the dollar also gets stronger, they wouldn't want to raise rates. And then the kind of wild card in all this is something that a lot of people said could never happen. Is they said they want to raise rates, but right, maybe instead of raising rates, they'll start selling off their balance sheet, which should have the same impact. Now, the Fed's balance sheet has ballooned, although it's remained relatively stable the last year or two. They've got like $4.5 trillion worth of stuff on their balance sheet, maybe 2 billion of garbage, but I think they have 2.5 billion though in US Treasury securities. And what they've been doing is they've been rolling over those Treasury securities when they become due. Instead, now they're saying maybe they start selling them off. I don't know. We'll see. I think that a lot of it's going to be driven in 2017 by fiscal policy rather than monetary policy. I think the Fed's going to take a back seat in terms of what the market pays attention to. They're paying a lot more attention to what the fiscal program, and for those of you who know the difference, fiscal policy is what the Congress spends, how much money they put or don't put into the economy. Tax policy, which would include bringing money in from overseas, tax cuts, spending additions, and then monetary policy is what the Fed does in terms of keeping interest rates at certain levels, and then also if they do QE buy bonds or if they're reducing their balance sheet selling bonds. So that comes under monetary policy. The last 8 years, it's been mostly monetary policy since the stimulus of 2009. And I think now we're going to move into a fiscal policy driven market. There's gold found inside an antique piano. It's a good article you're interested in finding treasure. U.S. Michigan, the consumer is still pretty, according to the U.S. Michigan Consumer Report, is still pretty excited. Retail sales, they're mixed, excluding autos. And autos are one where there's been a lot of sales in autos the last 5-6 years, and that's all on credit. And if interest rates do rise, you'll probably see that come crashing down. And there's nothing worse than having a college degree and a car loan, because unlike a house, at least you can give the house back, or you could say you have some equity in the house. The car, there's no way you have equity in a car. You owe money on the car, and all they can do is come and get your car and you're rideless. And they can come and take your diploma, but that's not how they foreclose on if you don't, if you can't pay your student loan. So those are two areas that I don't yet see any improvement for millennials who have car loans and student loans and don't have decent jobs, unless they are willing to move into these types of manufacturing jobs, infrastructure jobs that Trump might try to boost through incentives, government incentives and subsidies to American manufacturers and or to contractors building these infrastructure projects. That may be a way that millennials catch some type of break in terms of getting jobs that pay more. Although those types of jobs are not what they went to college for. So we'll see how all that plays out. More U.S. Mint reports. India reported on this yesterday. Indian silver imports did not increase in November, did not increase in December. A lot of people are, I guess, silver bugs are thinking that if there's going to be a problem with gold in India, that Indians are going to move to silver. This article basically shows that it hasn't happened and also explains why I think it probably won't happen. Not that they won't have a continued need for silver, but silver is no substitute for gold. And if they're clamping down on gold in India, they're not going to leave a loophole for silver. So I expect silver and gold demand in India to remain muted in 2017. And then here's also Indian gold imports did rise significantly in November, but they fell back again in December. That should do it for the week. Thanks again for listening. Please remember to subscribe to Smaulgld on this YouTube channel. Subscribe to Smaulgld on at smaulgld.com. And also, if you're interested in donating, I appreciate that. And thank you very much to those who have donated and those who are buying their precious metals through the Smaulgld website or through the links below the YouTube channel. Thank you very much.